So welcome to today's event. Tonight or today, wherever you are, we're going to explore how VCs deal with corporates, mostly focused on how to fundraise from corporates, so having corporates as LPs. But we'll go through also a discussion on how to partner corporates, how to engage corporates with our portfolio, like value creation activities, and trying to discuss all the details on how to deal with corporates. So a bit of housekeeping before I pass the baton to Jack. So introduction on Kaufman Fellowship, for those who don't know. Kaufman Fellowship is a VC network created around 30 years ago from the Kaufman Foundation, which is the largest pro-entrepreneurship foundation of the world. It was started to train VCs and make them more pro-entrepreneur, let's say. And it has grown to, I think, 800, 900 fellows worldwide and becomes very international. It's one of the largest network of great venture capitalists in the world. And we have a bunch of Midas list. So I definitely encourage everyone who is pursuing career in venture to check out the Kaufman Fellowship or to engage a fellow. We have, for those that are Italian, I see a lot of people from Italy. There are, I think, 10 or a dozen of Kaufman Fellows in Italy. So reach out, and we need to improve the status of venture capital in Italy/Europe, which is the continent where I'm at. Again, a bit of a housekeeping. The way we usually do with this meeting is we have half an hour, 45 minutes, which is open for everyone. And this part is recorded and will be posted online on the Kaufman Fellows channels and the Impact VC channel. And then we'll ask you to leave, and we'll have a Kaufman Fellows only session. So I know most of the people online, but if you're not a Kaufman Fellow, when we reach a certain time, please disconnect, because that's private only for Kaufman. I think that's all for the housekeeping. So now I'll introduce Jack, which is a speaker and my co-chair with the CVC group at Kaufman, and podium to you.
Thanks, Alessandro. Welcome, everybody. We're excited to have a panel today talking about corporate LPs and corporate collaboration. My name is Jack Crawford. I'm a founding general partner at Impact Venture Capital. We're a C-stage fund that invests in AI companies alongside of corporates. Our check size is $500,000 to $1 million, and now our companies have been followed by $500 million of follow-on capital from Intel and Zoom and SK Hynix and Yamaha and Qualcomm and a bunch of others. And so what I've been doing is trying to learn best practices from other VCs and other corporates about how best to collaborate with corporate investors and corporate LPs. And so I'm excited to moderate the panel today with three accomplished VCs who have a lot of experience in interacting with corporates as LPs and as co-investors. In addition to moderating the Kaufman SIG Special Interest Group for Corporates, I also got a chance last week to moderate a panel with the National Venture Capital Association that included Intel and Thomson Reuters and Lockheed Martin. So I'll share some of those experiences. The format today will just be 1-minute introductions. That's mine. I'll turn it over to Rodrigo in a minute, and we'll just go right down the line for 60-second introductions. We'll dive into the panel discussion, and then we'll open it up for Q&A. So let's start. Rodrigo, why don't you give us the 60-second introduction?
Of course. Good morning, everybody. My name is Rodrigo Sanchez. I'm a partner at B37 Ventures. B37, we are a venture firm based here in the San Francisco Bay Area. We do seed to Series B. Our typical check size would be like $1 million check into a Series A company. We manage about $130 million, have been investing for about the last 11 years or so. And our model, we partner with multinational corporations to leverage their operations to inform our investment thesis and get into good deals here. And then we also partner with them to implement those innovations or that technology into their operations. So we think about, we leverage these corporations to help understand product market fit, go-to-market strategy, and then create business development opportunities. And that's what we do for our portfolio. Was that
Thanks.
60 seconds?
No, you're quick. You're faster. You talk fast and drive fast like I do. That was
Perfect.
impressive. Gonzalo, you want to go next? You're next on my screen.
Sure. Hi, everyone. My name is Gonzalo. I'm co-founder and general partner at Cardamom Capital. Cardamom Capital manages today 250 million. We have several strategies. We started investing in Israel in deep tech, AI, cyber, big data. There we do pre-seed and seed. The reason we started there was because I was the founder and the head of the Samsung Ventures Israel office. Prior to that, I was in headquarters investing on behalf of Samsung. I've been doing this for 15 years, and we have over 12 LPs that are corporates. And in terms of co-investments, we are constantly looking for co-investments with corporates because we know how to work with them and then leverage them in the same way that we add value. They add value to us. Happy to be here.
Oh, fantastic. And Matt, why don't you finish this off?
Yeah, great to be here, everyone. Matt Maurer. I'm a partner at a firm called WVV Capital. I actually started the beginning of my career on the venture side, and then I went off and I was a founder for about a decade. So I've got a bunch of experience over there. Sold a company to a large corporate, and then spent a couple years inside of the corporate, coincidentally partnering with startups on the outside. So I've kind of seen it over there. And then for the last 4 years, I'm back now investing in venture at a fund. WVV is what it's called. We're backed by 4 large corporations. We're an early stage $100 million fund. We do anything from pre-seed all the way through Series B. And it's a lot of strategic investing kind of on behalf of the industries of our corporates. And then anytime we can pull it off, we try to do some interdisciplinary investing between those industries. So that's what we're about.
Thanks, Matt. I want just to stay with you for a second and kick things off. Maybe just we'll start with a general question. How do each of us work with corporate investors? At Impact, we have these corporate innovation programs. We're running events in person and online to gather market insight that we believe elevates our investing IQ at the seed level. We co-invest with these corporates, and certainly we're looking to accelerate the timeline to exit. When we invest at the seed level, if we feel like we understand what the M&A teams at these corporates are focused on, that's a big part of how we're collaborating with them. Matt, how are you working with, I guess, the 4 corporates that backed you and others in the ecosystem?
Yeah, we take a pretty face-to-face, like real-time, get people on the phone and spend a lot of our time learning and relearning and really just understanding the direction of our corporates. We're lucky in the fact that we only have 4. So sometimes 4 seems like a small number and it's manageable, but sometimes it seems like a huge number because they take a lot of effort to really understand what they're trying to do strategically. So kind of the workflow for us is on at least an annual basis, but when possible on a quarterly basis, we try to sit down with them, really understand where their strategic directions are going for the next cycle. Sometimes it's a 12-month cycle. Sometimes people are at the exec level planning on 1, 3, 5-year cycles, and just get a sense for what is in the crosshairs immediately, what's in the crosshairs long-term, where is budget being allocated for the next cycle. And then it's kind of a Venn diagram. We overlay that against what we are seeing as interesting places of startup innovation within each of their respective sectors. So we kind of pull back and sit with the intelligence we get from them, pick out a few specific areas of opportunity that we think overlap with their problems and their technological interests, and then go off and do kind of the intense research phase, making market maps, making reports, meeting a lot of startups one-on-one, bringing them back into the corporations for meetings at the exec level. Kind of what we like to do is really find that throwing a dart at exactly where they might be relevant to a specific business unit within a corporation, which is kind of a lot of intel gathering to get to that level. And then fast forward to the end, if we may make an investment in the startup, we may not. We may facilitate partnership with the corporate. At the base level, it's almost always really good educational exchange for both sides. Both are very mutually interested to learn from one another. And then we've also facilitated co-investments and kind of a series of other ways that they partner together. So that's kind of our arc of working with corporates and startups.
Matt, do you view yourself as the corporate venture arm of the 4 corporate partners that you're working with?
God, great question. Nope. I would say in the early days, it was important to really understand where the lines were, what each corporation was doing as far as their own venture activity, if they had it or not, if they did have an internal CVC, kind of what that meant to them and how that existed in their ecosystem, and then how we could be complementary. But yeah, I would say in no way are we, formally or officially investing on behalf of these corporates. We always kind of stay at arm's length.
Okay, thanks for that. Gonzalo,
Yeah.
talk a little bit about how you work with corporates and what the collaboration looks like.
Great. Yeah, so we have a number of ways to work with them. The first thing to note is we do not decide on investments on the basis of what a corporate or an LP might think, right? We make our decisions, and that's one track. However, we do have 3 people that do around 80% portfolio support and around 20% LP support, corporate LP support. So things that we do are mostly scouting. Scouting could be for a collaboration or an investment, right? And it's not necessarily within our portfolio, it's outside looking, right? It could be anywhere where we have reach. And in addition to scouting, we also do sensing. Sometimes they ask us to check out a specific theme that they want to look into. And so we'll look at startups, we'll look at trends, research reports. These are more ad hoc and it's not very recurring, whereas the scouting is very recurring. We also give them a chance to sit with us, to bring an employee and do a secondment, just to see how we go about things, how, the style, the language, things we worry about for them to learn. We have a recurring corporate venture club, which is just putting all of our corporates together and having themes and invite guests to talk about specific things. Sometimes we talk about, structures, safe versus convertible loan, and anything they might want. This is something that we usually source. And then, of course, that's only on the side of the corporates that invest in us. In addition to that, we have lists and lists of corporates that we are aware of, that we constantly send deals to, with the hopes that they'll co-invest or sometimes just do business with our startups. So, generally that's how we go about it.
How many corporate LPs do you have? Matt mentioned he's got 4 corporate LPs and he works with the broader ecosystem. We have a couple of corporate LPs, and then we have, I don't know, I think the number's over 200 that have attended our events virtually or in person, so, or been on Impact TV, the corporate venture video series that we run. So we feel like that we're working with hundreds, but really we have a formal relationship with a few that are LPs and a few that are co-investors. How many corporate LPs do you have?
So it's I forget the exact number, but it's above 10. And we have anything from as little as $1 billion in revenues. So they're small companies, right? I wouldn't necessarily call, maybe 2 billion. So I wouldn't, maybe a corporate, but.
Oh, Gonzalo, you just muted for a second.
Sorry, extremely profitable businesses that are small. Many times we're talking to the owner, so they're happy to, and they may be tiptoeing into venture capital as we speak. So there we're guiding them a lot more as to what this is about and how not to mess it up. So in 3 years they regret everything and they stop everything, right? Which is a classic. Up all the way up to, tens of billions in revenues, if not hundreds of billions, in oil and gas, in energy, and others, both in Europe and in Latin America and in Asia.
Great, thanks for that. Rodrigo, I've seen these corporates sort of come from attending events to investing in venture funds to building up their internal capability, and now they seem to be actively looking to collaborate with VC firms. How do you mostly collaborate with corporates?
Yeah, corporates have really tried to be in the ecosystem one way or another. In our case, we have seven corporate investors. They're all kind of between $1 and $20 billion in revenue. These are corporates that operate in about 34 countries around the world, serve millions of points of sale. They're in very diverse industries: food, transportation, manufacturing, finance. And one thing that's kind of a little bit, and about 50% of their revenues is in the US, but the rest is worldwide. And so I guess we partner in a very hybrid of what's been said already. like we do view ourselves, and we tend to pitch it to the LP as we want to be an extension of their innovation team. So a lot of what Matt was saying, right? We partner at the highest levels. These are companies that are not extremely big, so we do have a close relationship with the CEO, sometimes if they're a family-owned business with a family that owns it. And we tend to look at it kind of tops down. What's important in the industry? What's important for the company? Where is this all going? But just to kind of, and then we have quarterly or monthly reviews of kind of our pipeline, or what's changed for them, etc., from a really just tops down view. But that just gets you so far. In reality, if like our objective is we want to leverage the information that is in their operations, right? All of the decisions that they're making should inform our investing and give us a little bit of a competitive advantage, or at least some more information about a certain opportunity. And in order to get that, we really have to get into the weeds. So our like real objective is we want to have an active network of champions inside of our corporate investors in those business units that have budget, authority, need, and are really like strategic for the company and are going to adopt technology in the near future. And with those teams, we really have an interaction that's day to day. Like we are either visiting their plants or their facilities, or attending trade shows with them, or just like really spending time understanding what they're doing. Or 2 or 3 times a year, we host them here in Silicon Valley as well. Have them meet other funds that we collaborate with here, or experts or startups, etc. And so really our objective is, have this intimacy that when we see an opportunity that we want to invest in, that's within our investment thesis, etc., we know who we have a first reaction because we know the opportunity, somewhat from our interactions, but we also are, a phone call away from someone who is currently evaluating that sort of technology. So I'd say it's a little bit of a hybrid of both things that have been said already.
Yeah, that's really helpful. Rodrigo, let me continue on with you and ask, that's functionally how you're working with these corporates. Now let's talk about how are they adding value beyond capital? What are they doing to add value to either your firm or the startups that you work with? I'll say that Impact Venture Capital is now collaborating actively with the National Venture Capital Association on some corporate innovation programs. So in last week's session that I mentioned, I heard Lockheed Martin say that 80% of the companies they invest in, they become a customer for, which I thought was pretty interesting. And I think that's going to, end up being a more of a recurring occurrence with these corporates. I heard Thomson Reuters say we have a worldwide global sales force for things like accounting firms and law firms. And so if there's software companies that have generative AI that want to get into that space, they've got a whole army of salespeople that can help get the product to market. And Intel Capital commented a little bit about curated introductions, making curated introductions to customers, partners, investors, media sources, industry research firms. I find that we do a little bit at Impact Venture Capital, a little bit of all of those things, probably not on the scale of Intel Capital, but we try. And so tell me a little bit about your view on where corporates add value beyond capital to your firm or to your portfolio companies.
Yeah, much like Gonzalo and Matt were saying, we are arm's length from our corporate investors. So there are LPs in our fund, but we are independent in all of the investing that we do. So the objective that we have is our relationship with these corporates should inform, our investment thesis. If we're not gathering intelligence that'll inform our investment thesis, then, why are we wasting time with these corporates? And I'd say in general, we gain intelligence in 3 areas. One would be product market fit. So when we see a company in an area that we like, at the stage that we like, etc., just understanding, is the pricing the right price? Is, what other things have been tried in this space that are similar or not similar? So just really trying to understand, is there, or how close is this to product market fit? And it's usually stuff that's, it's venture, right? So it's different from what the corporate has already been evaluating because they're, evaluating later stage deals. But it should be kind of sufficient information to understand, where are they in this product market fit roadmap. The second would be information about a go-to-market strategy, right? So this type of technology or this type of product or service, etc. Like who makes the buying decision, the procurement decision, how long does it take, what sort of ROI does it take, etc. Like really trying to understand what that go-to-market strategy the startup has and how well does it fit with, you know, the regular corporate environment. And then third, I'd say definitely what you just said, business development opportunities when they become relevant. We don't really look for an exit opportunity within our corporate investors. We believe that, you know, startups that are very close to their core business will find a way to, you know, go pitch their M&A team or go pitch their corporate ventures team. For us, we really try and focus on things that are outside of the core business of our corporate investors. And that way we can bring things that they will use, that they can maybe build, you know, some strategic advantages around, but they're not going to want to acquire those things, right? So but they will hopefully want to. Our corporates have bought, I think, about $250 million of products and services from our portfolio companies. So we do foster business development. It's just, you know, that's a great outcome if we've been able to find the right startup and, you know, fostered it through the first two things.
That's really insightful. Yeah, thank you for that. Gonzalo, talk about your view with regard to how corporates are adding value beyond capital.
So with all due respect to all of the corporates out there and my own LPs, we don't expect a lot. Okay, so hope for the least and then make the most out of it. I'll complement what Rodrigo just said, hopefully with some ideas that are a little bit different from those. One thing that was critical for us, and I know that in the States this may be limited, we marketed the fact that they invested in our fund, and that was a huge catalyzer for our first fund. So thanks to the investment of Banco Sabadell, which is one of the largest banks in Spain, that brought in interest from other corporates, and it really validated us, and that was on the news. I don't think you can do that in the States, but just saying that there is value in getting corporates in. The other thing that I think is interesting from the perspective of the startups in your portfolio, whether they're your LPs or just co-investors, you know, in addition to the business development opportunities or becoming a venture client, when people buy startups, the first thing, and I know because at Samsung I was working at the ventures team, but I also talked a bunch with the corporate development guys. One of the easiest things to do is let's check out what Andreessen has, let's check out what Sequoia has, you know, big VCs, but also let's check out where Samsung invested or SK invested or, you know, any other corporate that might be relevant to this other corporate. So you know, the stamp of approval of a corporate has a ton of value when it comes to selling in the future and also to be in the radar of potential acquirers. So I think there's a ton to be gained from that.
Yep, thanks for that. Matt, what's your view of how corporates are adding value beyond capital?
Yeah, I've got a couple, I think, interesting ones to add. One is we're a young fund. We're on our very first fund. And so no one knows who we are really, especially when it comes to startup founders. And so we've got to fight tooth and claw to win deals sometimes, but having the corporates behind us, especially when there's a good alignment between one of our corporates and the startup we're chasing, really helps in winning deals. Like there's been a bunch of times where one of us can just say, hey, what if we just text the buyer of the largest gorilla in your industry and just kind of see what they're thinking about the space, see if they've heard of you, you know, maybe they're interested, and like that goes a long way in just like proving that we kind of bring what we claim to the table. I think the distribution channel is a good one. Sometimes the corporates can provide that. You got to be patient. That takes a long time. You got to align a lot of planets to get it going. I appreciate a lot learning about corporate budget awareness. I think about this word budget a lot. If you've ever, you know, anyone here has ever spent time anywhere around large enterprise sales and figuring out, you know, when corporates and excited people inside are willing to take a conversation and learn, and just, it's exciting to be on the cutting edge of what's happening in, you know, startup innovation. But then is their budget seeking to buy in a relevant time frame for that startup? There is often a Grand Canyon between those two positions. So I pay a lot of attention to where budget is going and just use it as a qualifying, you know, way to accelerate the process and not just like end up at 1,000 dead ends. So that's useful because corporates are really helpful in kind of explaining where they're going. And then I think one of my favorites is just having spent time on both sides, like providing a vocabulary to folks. When you get corporate representatives in a room with startup founders, especially if they haven't spent a lot of time in each other's worlds yet, and just watching the way that the two polar opposites will describe a problem space and describe seemingly the same industry. They use different words and phrases, and they both learn from each other. Like it's not just the startup learning how to build a sales playbook, but the corporates are like, oh, this is actually how they're talking about it on the front lines of technology, and like this is where I can go learn more. So I like that just knowledge osmosis that I can just sit back and watch is kind of fun too.
That's been one of the most interesting things for us as well, is being the trusted advisor between market innovating startups and market leading corporations, and sort of helping to bridge the dialogue between those two. And oftentimes, to your point, we're a source of introduction for the startups to the corporate community, and we're a source of innovative stage and industry relevant deal flow for the corporate. And so being right in the middle makes venture capital pretty fun. So it sounds like you're doing a lot of the same things. Matt, let me stick with you and just ask, with regard to your experience with corporate LPs, are you finding that do you have any traditional LPs? Do you have a basis for comparison of how they would interact with you compared to a traditional LP? I mean, we're seeing obviously quite a different set of behaviors. The corporates are looking at sourcing deal flow. They're happy to collaborate on due diligence. They want to add value to the portfolio companies. They're looking at co-investing and acquiring. The traditional LPs are really just, hey, I'll see you at the annual meeting and send us our K1 tax form, and that's about it. They're looking for a return only. Can you tell me a little bit about your experience with sort of traditional LPs versus the corporate LPs that you have?
Yeah, I think it's always the question, right? Is you interested in a financial return or a strategic return? And I think what I hear most often is everybody just says both, because I guess why wouldn't you? They're engaging with a financial firm at the end of the day, so we're supposed to be able to find alpha. So why would you say don't worry about that side of it? So I see everyone saying both. I always have to really kind of give it some time and ask a lot of probing questions and talk to different people to kind of figure out where the line is between the two. And then, if there's a financial goal, try to figure out kind of where that line routes up to the corporate. So in some cases, even though we're backed just by corporates, there's still a ton of diversity in the model. So in some cases, we kind of roll straight up to the CIO, and sometimes their chief point of contact is the deputy CIO, and they just see the world through ROI models. And in other cases, we kind of roll up through innovation, corp dev, in one case, the CTO. And then it is less of a priority. There's kind of a dotted line over to the CFO office, but I don't think we are, much of a known entity over there. So it's a lot of exploration. But I think at the end of the day, for me, the strategic priority is way more common, way more the goal. And that it doesn't look like I'll see you at the annual meeting. It's oh, we heard about this player in our space. We don't know anything about him. Like, what do you guys know about him? Can you find out more? Sometimes it's panic, right? In like a fun sense, it's very eager. So yeah, I think we spend more of our time really trying to satisfy that strategic angle.
Gonzalo, what about you? As you look at sort of strategic and financial returns from corporates versus, kind of the passive role that a traditional LP might play, just looking for investment returns only. Can you talk a little bit about that with your corporates?
Absolutely. So things that we see that are a little bit different. We do have a lot more comments on the LPA, limited partnership agreement, from corporates than from traditional financial investors. All kinds of things. They'll ask for a Seidler and this and that, and most favored nation. And it's painful, and we tend to say no until we have to say yes. Sometimes we do have to do changes, right? But the general answer is no, whatever they're asking, because it's just annoying. But sometimes you have to accept those. Then there's the aspect that because corporates change a lot, you may change, the sponsor may change, the point of contact may change, the executive may change, and all of a sudden you may be left with a corporate who, doesn't want to do anything with you anymore. which is fine, right? It's up to them at the end of the day. But we have a situation with a company that's about to be bought, right, or is in process of M&A. So they're like, look, if you find me liquidation, I'm happy to get the liquidity right now because I'm busy with other things. Then I'd say that it's a completely different type of conversation, and it's less the money, because the money is never the point of contact's money. It's the corporate's money, and it's more of like, what can you do for me within the corporate? Can you help me get technology that the business unit is asking for me to source? Can you help me advance my career in venture capital? So there's other motives to be doing that. So it's interesting.
Awesome. Rodrigo?
Yeah, we see, I'd say like 40% of our assets under management are non-institutional financial investors. And honestly, so we spend a lot of time, effort, management fee, everything with corporates, because our objective is to leverage them. And so that is, if you want to think about it, like it's very low margin, because we have to have, most of our team dedicated to that. We have to have people that spend money on people that are dedicated just on those partnerships, versus when we have just a financial investor, it's much more about just here's the money and let's create a return. Many of us, our financial investors are really non-institutional, so they do look at us, to understand new areas, or what they want to see what we think about certain technologies or certain areas that might inform investing in other places. Or they might ask us, what does the group of corporates think about these applications or these technologies, etc. So we're kind of a source of information for them in some way. But as a GP, we are, and as B37 is purely financial driven. We leverage our corporates to gain intelligence to make our investment. And we believe that, our corporates are leveraging us to generate some sort of advantage or some sort of something. But our objective is purely financial. And so, we are very, I'd say, aligned with our financial investors in the sense of, look, if you can generate alpha and you can make an investment, then we are more than happy to give you money and, stay arm's length. And that's great for us, because as a GP, it's a more high margin sort of investor. We don't have to invest a whole lot of people and time and effort in maintaining those LPs happy. Well, they will be happy when they get a return, or they are happy when they get a return.
Awesome. Yeah, thanks for that. So let's shift to the rapid fire portion of the program with the last few minutes that we have here. So I'm just going to look for 10 to 15 second responses from each of you on just a series of questions that I'm curious about. Rodrigo, why don't I start with you and just geographic focus? I mean, Impact Venture Capital is investing in the US, mostly Northern California, Southern California, and New York is where our team is at, but we'll invest anywhere across the country. Just talk about your geographic focus.
Yeah, our team is here in the Bay Area. Our investing team is here in the Bay Area. Kind of more of our operational team is in Mexico, but we do all of our investing in the Bay Area. So our geographic focus from an investment point of view is here.
Gonzalo?
So we invest into Israeli and European founders in Israel, Europe, or the States. If they're abroad, they have to be in the States.
Matt?
Yeah, we've got a US focused. Our investing team is all West Coast based. And then we actually have a strategic interest in the Midwest also. So I'd say it's nationwide, West Coast first, Midwest second, kind of the rest of the US third tier. Okay.
Now let's talk about just a few more rapid fire questions. Largest check written so far. We wrote as a seed investor, we wrote an accumulative $4 million check into a company, and then we were surprised when our LPs, corporate and otherwise, came in and wanted to put another $20 million into follow-on rounds through an SPV. So that was quite unusual. That's the largest sort of check that we've written so far into a company called Kornami, an AI chip company. Matt, what's the largest check that you've written so far?
$5 million for us into a company called Measurable.
Okay. Gonzalo?
$4 million. That's it. But that trickled a $42 million round. But that was the largest we've done.
Okay. Rodrigo?
I think it's 20 million or 25 million into a company called Dexterity Robotics.
Okay. Biggest wins so far, Rodrigo. We've had companies that went from 50,000 to 9.5 million in ARR. We've had one company where we invested at a $20 million valuation, and now SoftBank, Qualcomm, and Applied Materials have come in at a $450 million valuation. Those are the things when we're looking at wins. What's the biggest win you've had so far?
Yeah, we have had a couple of companies that we invested at the seed stage, and now their latest round was above $1 billion. And our most successful company, revenue-wise, is doing $500 million of ARR. So.
Fantastic. Gonzalo?
Amazing. So we have we started in pre-seed, so we have a bunch of companies that are in the 100, 200, 300 million sort of pre-money valuations when we invested at 5, 6. So those we have probably around 6 of them in the total. And in terms of revenues, the largest revenue generating company is probably doing 5 million. So nothing compared to Rodrigo's.
Well,
And
we were
Matt?
lucky because it's actually a company that we invested in a different company and then they were acquired and that went really well. So luck is a big part of this game, as everybody understands.
That's a big part. Matt?
Yeah, we're a little younger in the tooth. I think for us that metric is we've had a few already that we invested in the 0 to 1 million revenue when they were there, and we've gotten them to eclipse 5, to eclipse 10, and really see them kind of just change the kind of company they are. And as a former founder, I get an extra kick when we invest at 0 revenue. So when it is a pre-revenue company, we can get them through a couple of those order of magnitude humps.
So Matt, biggest mistake so far. We've got most of the Kaufman Fellows, so we can talk candidly. My biggest mistake so far is probably not taking some chips off the table when there was a subsequent round of financing. We could have gotten a portion of our ownership bought out and produced a larger distribution. We went back and forth about truncating our upside. But I look back at some of those opportunities and wish that maybe we would have distributed a larger amount to our LPs and sold a little bit more to get the DPI numbers up. So that when I look back, that's one mistake or second thought that I have. What's largest mistake so far?
Yeah, I think for us, we've had a couple instances that still sting a little where we just got way ahead of the technology trend. And I think in the diligence, we felt it a little. We haven't let this thing mature at all, even, this niche of AI 4 years ago. And we were so hungry to place a bet on it as a team. And it just failure to launch. We've had a couple of those where I feel like we kind of knew it in retrospect. So that's been our biggest miss.
Yeah. Gonzalo?
So we invest in pre-revenue, pre-seed, usually it's first money in. And we have done a couple of investments in the 35 that we've done where we broke that rule and we came in a little earlier thinking that we were opportunistic. There's for us a huge stigma and there's a rule not to do that. And we did it anyway and it didn't go well. So I think old companies we don't like. We like new.
Yep. Rodrigo?
Yeah, we wasted a ton of time working with business units at our corporate investors that, just didn't have the technology framing or, for example, we have an interesting thesis on, climate tech, or we want to make some bets there. And we started working with some of our investors teams, that are doing net zero or climate tech or whatever. And some of those teams, like they don't care about technology, they don't care about innovation, they don't care about B37, but we spend way too much time trying to convince them versus the other way around, right? Which is, okay, if that doesn't work, then what are business units that are very technology forward and how can we leverage them? And that was a big learning. It burns out the team, burns money, everything.
Yep. I get it.
Been there.
Rodrigo, best corporate to work with. I guess we'd have to say SK Hynix we've learned the most from about market insight and technology trends, but Thomson Reuters acquired one of our portfolio companies, so I guess we have to put them up on a pedestal. Who's your favorite corporate to work with?
We work very closely with a company called Grupo Bimbo. They're the largest baking company in the world. They own Sara Lee, Entenmann's, a bunch of brands here in the US. And the Bimbo USA team is great to work with.
Gonzalo?
For me, my favorite are those that are very active. If they're deploying money and they're in the game, that usually goes for a better collaboration. We've co-invested twice with my former employer, which is Samsung, and it's close to my heart. So that's probably one of the most exciting for me.
And Matt?
Yeah, we've had a couple really, really collaborative ones that have been fun. I think if I had to call it out, the one that's probably been the best for us is a company called Johnson Controls, which I didn't have a lot of background and familiarity in that industry coming in, but they do a lot of property tech and climate investment, energy systems into buildings, right? So it sounds kind of old world, but we found them over the years to just be very, very agile, very like low ego institution wise, which is just not words that I'm used to facilitating with or associating with corporates. And they're quick to partner, and they're very good at articulating kind of their own problem spaces and how they're interested to address it, and say, talk to this technology person on this team over here that would have taken me 9 months to find that person if I was outside. So that's the agility and just the hunger to kind of self-improve seems to be across the board, and that's made it extremely fun to work with them.
Awesome. Okay, last question, and then we'll open it up for Q&A with the audience here. As you guys may know, my thought leadership project at Kaufman Fellows was on strategic planning for life, sort of taking business practices and applying them to life, and thinking about sort of how do you make yourself better from a professional development standpoint, and how do you sort of live your best life. All that to say, I'm curious as to your favorite podcast, and you think that mine would be on sort of work-life balance or something like that, but I keep gravitating back toward All In. I just love that love that podcast and the way that it covers a variety of topics. Matt, what's your favorite podcast or professional development publication or personal development publication?
Let's see. I listen to a lot of them. I spent a lot of time in the healthcare industry. That's where my startup existed. And I think I'm just a science geek at heart. So I will take deep dives with Andrew Huberman all day, every day, and just let him, talk to me about research for 3 hours at a time. So I think it's Andrew Huberman Lab is #1 right now.
That's great. Gonzalo, favorite podcast, either for personal or professional?
I made my life goal to never ever commute to work. Since I lived in London for 6 years, I hated my commute, and I have kept that promise. So I'm usually 5 minutes walk to every office and every apartment that I own. So I don't listen to a lot of them. All In is one. What I do sometimes is I'm very interested in geopolitics and macroeconomics, and so I just listen to the classic CEOs, chairmen of the big banks, and so on, and large corporates just individually, but not on a podcast level, more on a ad hoc level on specific topics.
Great, thanks for that. Rodrigo?
I, in general, love biographies. So I love reading biographies. I love it. So Acquired, the podcast is great because it's kind of like stories of people or businesses, etc. So that one I like.
Fantastic. Thanks to all three of you for the rapid fire session and the engaging discussion today. I really appreciate it.